Hello, Alan, and thanks very much for joining us on Blue Notes. You've been instrumental in this latest Insight report, Now for Investment. It looks at the China-Australia Free Trade Agreement 2 years on. It's now 2 years into it. Has it played out as we might have expected, the ChAFTA agreement?
I think even a little better. What's really been picked up in it has been interest in investment. Markets for agriculture opened, of course, and they're very big, but the investment side is most interesting.
Because there's three elements really when we look at these things. There's the trade, which, trade agreements by their nature you would hope would improve, but there's also been services and then the investment side. So it's the investment side that's played out better than expected.
Yes, and what becomes clear is that China's interest in investing in Australia is similar to Japan's. We're a major resource provider. We're the world's biggest exporter of minerals, and for China that's obvious interest, coal, iron ore and other products. So in many senses it was almost a natural thing to happen.
There's obviously a political dimension to this, but to fully develop the opportunity, companies need to do more to talk about the foreign, the FDI story?
It hasn't had that much public coverage. I mean, I don't think people are aware now how important Chinese investment is in Australia. It's coming up the scale quite quickly. Not as much as Japan, not as much as the United States, but it's heading into that territory. I think the concern that used to exist in Australia about foreign investment is pretty much bypassed. I mean, I think most people are intrigued at the amount of flow of product that's going back into China from Australia. And I think a lot of people don't realise how important Australia's become with Chinese trade in these areas.
And with how we've seen, it's only 2 years in, so it's early days for ChAFTA, but we do talk about services, trade, and then the foreign investment. Will that shift the opportunity from those sectors? Will it shift over time as this develops beyond 2 years?
No, I think it reflects the natural synergy between the two economies. I mean, we talk a lot about traded products in Australia. The reality is we're not a very significant producer of traded goods. Agriculture's been our long-term product. Manufacturing has really been too difficult for us because we're so remote from the markets. So what we're seeing is a growth in the services area where China is actually a major supplier, and I think that'll continue to grow.
And economic theory, the theory is that it's actually better for an economy like as Australia just to lower barriers unilaterally. Do these bilateral agreements like ChAFTA and the other free trade agreements, do they run counter to that?
Well, I think the interesting change that's occurred here now is that worldwide tariffs on goods are quite low. Today's modern trade is about investment and services. We can open our markets for that. We've done that for investment, but I think it does need development of quite good relationships with the other countries to foster these arrangements. And of course, China is not a completely free economy. To do arrangements with China, we need to satisfy the interests of the Chinese government, how that works, and I think we've got pretty good balance.
Well, thanks very much for your time today, Alan. It is a public report. There is a link that will be below this video. So again, thanks very much for speaking with Blue Notes.
It's been a pleasure to work with you guys.